All right, guys. Welcome to the December 12th webinar where we're going to be breaking down what it is we're actually looking for and how we're planning to go into this next week, right? The market has been pretty indecisive. We got, a lot of, just indecision going on in the market. And honestly, it makes a lot of sense. If I pull up the SPY chart and we look at the daily time frame, the first thing you're going to see is that we're trading at all-time highs, right? Anytime you're coming up into all-time high territory, things are going to get a little indecisive. They're going to get a little reckless. And that actually helped us on Friday with trading with shorts, right? Once again, we come over to this daily time frame. What do we see? Right? We got all-time high. Now, for all my supply and demand traders, right, it's easy to go, okay, this is a resistance, right? This is where there was previous resistance. Price has came back into this level, and we have gotten a lot of selling, okay? So now, how price reacts to this going forward is going to play a really important role, right? Like, just look here how price came into the 20 EMA on the daily, right? So we're going to, whether it goes up or down, it's pretty much, nobody knows. But what I want to talk about in this webinar are the tools we use to figure out if it's going to go up or down or identify opportunity, right? And that's going to be our process. So let's go over the week here and just take a look at how price was and how we were able to trade it this week. All right, so going into the first day of the week, this is 12/8/2025, right? Now, remember, the primary focus of these webinars is to help us execute our system, right? So we got to get really clear on what our system is. And Monday was a perfect example, okay? We get a moving average cross at open print, okay? Right here, this gray line, that's end of day. This is previous day low. And then we got 683.87, okay? So going into the day, the way I look at it is whoever can control the open, right? If buyers control the open, I'm targeting this guy. If sellers control the open, I'm targeting EOD in previous day low in 683. And you can see what happened. Sellers took the open, price went down to all these levels. Right? Okay, cool. But what can I look for to take advantage of this? Is it repeatable? And what's the criteria? That's the $1 million question, right? Like how do we actually know? And the truth of the matter is there is no way to know, right? There's only a way to identify when the odds are in your favor, and that's what our strategy gives us, right? What's the first thing we look for? The open print. Second thing, a moving average cross. You don't need a moving average cross. We could talk about other moving average principles, but for this, we're just going to use the moving average cross. Second, you need the green bar that's ignored, right? So once price comes off the open and we get a green bar that's ignored, we now know that our system is present, right? We now know sellers are in control, and I just now need to find a way to get into the market.
I need to poop.
Then go, baby. Go ahead. Downstairs. Do you need me to help you?
No, I'm scared when I go down.
Okay, but you're going to have to just do it, okay? I'll be right down. Okay?
And by the way, yesterday, Stella peed on the scale.
Okay. That's all right. I know.
She might be doing
it. She probably is. It's okay. Whew. All right. So now I got my GBI, right? I got my green bar that's ignored. What does this actually tell me, right? That buyers hopped into the market and sellers disrespected them, right? So if it's up to me to identify opportunity, I got to figure out who's controlling this level. How am I going to do it? GBI, green bar ignored at the key level. As soon as I see this, I want to go short. But this candle is pretty large, right? This is a, 74-cent candle. So if I'm trading futures or options, I'm not trying to risk this much money, all right? This is about 35-40% on SPX contracts. Maybe a little less on SPY, but on futures, that 5-minute candle is going to cost me like $500-$600 a contract. So I go, okay, how else can I get into this market? Let's see if we get another one. And we did. We got another GBI right here, and I entered into the market short right here. And I put my stop right above this candle, and you can see here we never were able to break that candle. Now, let me be clear. When I say the stop goes right above this candle, it doesn't mean at the wick, okay? This is very important. It means at least 10 to 15 cents above it on SPY, on futures, at least 2 ticks, okay? 2 to 3 ticks. You have to give the market room, right? Like, we have to adapt to the market. The market doesn't adapt to us. The market don't give 2 shits about where our stop loss is, right? It's coming for it, right? The market isn't going to go, oh, wait, I have to respect this, the wick rule, right? The market don't care. The market operates the way it's going to operate based on its just inherent characteristics, right? And that's just what market structure looks like. So I'm going to pull up SPY over here. We're just going to see what it looked like on the 2-minute. But I'm not going to lie to you guys. I wasn't even watching the 2-minute on this trade. I was watching the 5. That's all I needed, right? That's all I really needed. And once again, what we were doing, and you'll see here on the 2-minute, right? We're getting some GBIs on the 2-minute that are being respected. So, like, it's not always like a one-size-fits-all. We have to be able to adapt. And the best way to adapt is by going, hey, what's our strategy actually telling us? And it's telling us when the odds are in our favor and we can participate with low risk. That's our job. To figure out opportunity where the odds are in our favor and we have low risk to participate. That was a great trade right there. Just trusting the strategy. And we were able to capitalize on this day extremely well using our system, right? Say you missed that trade and you got to the market a little bit late. All you would have to do was identify this GBI, right? We had one right here. Bam. Price comes up to the area of value, tags it. Once you can't close inside this box, this is another entry. I think you guys see me do this on Friday on my second trade on ES, right? Like, when price comes up to the AOV and tags it quickly, I'm not telling you to get in right here. I'm telling you to wait for the candle, this guy, to respect the area of value. When this candle right here respects this box, enter into the trade. How do you... Okay, let me get more clear. How do we know it actually respected it? Look how it closes. Okay? This closes after it tags the AOV. It closes right on the moving average. It does not close bullish, right? So, okay, what's the candle telling me? Sellers are in control. Let's go short, target this guy. Right? Oh, and if you miss that one, you could trade this one. Same exact thing. Right? This one respected the 2-minute 20. Right here. Beautiful. Beautiful. We shorted the market right here. Boom. Monday was great. Monday was extremely good price action. Another GBI right here. This is what we look for. RBIs and GBIs. And this is why I look for them. Because they clarify the madness, right? Like, it's our job to look at the market, figure out who has the ball. And this is how I do it, right? This is just how I clarify my entries and my exits. And just notice, once you get the GBI, this is now bearish until they take back the level, right? Really good day right there. All right, I took a little too much time on that one. All right, let's talk about some losers. Okay, so after Monday, we're feeling great. We're feeling bullish. And we come into the market, and what do we get right here? A big mess, right? So I had a lot of people contact me about this day, and the key thing here is you need to ask yourself, did you follow your strategy, right? And so we took the market long right here. And we ended up getting stomped out right here immediately. And now we got to ask ourselves, let's bring it back to what the edge is actually representing. When we see our 3-step approach, we are seeing a visual graph, a presentation of one side of the market being more dominant in a way for us to get in with low risk, right? So when I seen this RBI off this key level, off the 20, I have to take that long, right? Like, that is That's my strategy. And we close right up, back above the moving average in long. Boop, get stomped out right here. Now, the market literally starts to shift, and we're able to, right here, right? Because I end up getting back into the market long on this candle using the cloud as my stop loss, right? Or as my guideline. And that right there is the definition of our job. Adapting, right? Like the system, the 3-step approach, that's like our vehicle, right? That's what introduces us to the game, right? Like, okay, we got a 3-step approach, and when we trade it, we tend to make more money than when we don't, right? Okay. But we have to really understand the purpose that it actually serves. And I'm going to say it 100 times. It helps us understand when the odds are better in our favor. Not when perfection is here. Not when 100% you're going to win money's here. It helps us understand when we have a good hand. Right? Does a king always win in poker or blackjack? No. But it does win around 70% of the time. Right? So that's the game we're playing, right? It's very important to really hit that there because, all too often, and I used to be the same way, nobody likes to lose money, but we have to be like, okay, we've taken a loss, but is the story still valid? And it was, right? Like, this was still very much bullish. We respected end of day, which is this dotted line, okay? The cloud was what color? Green, baby. Where was the 1 hour trend, right? 1 hour trend was right here. It was inching up, right? So this was bullish. Everything about this was bullish. Hop back into the market long and was able to get a great trade right there. I took another short play, and I really felt good about this trade. But so I ended up going to the gym, and once I came home from the gym, I see we have moving average cross. And price looks like this. I missed it, right? I was not able to capitalize on this short play. Beautiful short play. So instead of getting frustrated or, letting FOMO sink in, I'm like, okay, well, what does this tell me? It shows me that sellers got the ball. So I draw my box, right? Like, this is my process. Identify RBI, GBI, draw a box, trade off the box. That's my system. Identify the GBI, draw the box, trade off the box. How do you trade off the box? You trade off the moving average that's close to it. Because if I just enter in when I tag a box, I won't know where my stop loss goes. But if I enter in when price comes up to the 20 and respects it, I'm now getting an entry in here and a stop here. So you see how this little channel becomes very calculated, right? The space between the entry and the exit is predetermined. It is precise because the moving average. This is so important, guys. Because entries are so damn important. If I'm just entering in and I'm unclear on where that moving average is, I'm at a massive disadvantage. But on the contrary, if I've gone, okay, the green bar is present, so this is bearish. Green bar ignored is present. I have my area of value. I'm looking for a retest here, but the moving average, the 20, is a little far away from it. So I'm like, you know what? If we can respect the 20, I'm going to get in short. My stop's going to go up here. Short play, took it down to 68387. Price comes back, I hop in the same exact trade. Why? Because the same criteria. Same exact criteria. Price can't close outside the 20, trade with the 20. Stop loss goes above the candle, not at the wick, above it. A little above it. Whatever you can afford. Right? And then we literally ended up getting another one, but that was it for me. That was just beautiful trades right there. And then we were done. Tuesday. Wednesday, I don't even know. You guys, we'll go quick on Wednesday because I'm running out of time. Wednesday was just garbage. But once again, it made sense, right? Why was it garbage? We had Powell speaking. Actually, I really want to talk about this. So Wednesday, price action's garbage. But even garbage price action is telling us something. How do we know it's garbage? Because the edge didn't have no follow through, right? We know in a healthy environment, the market's going to give us the red bar that gets ignored, and then we're going to get our entry, and then we're going to get maybe another like large green candle, and then what are we going to get, right? We're going to get another red bar that gets ignored, and then the list just keeps going on and on, right? Like this is healthy price action, right? This right here is what we want, right? Like this is a happy face. This is what we want. So if we get the setup and it doesn't have follow through, we just want to notice that and be like, okay, maybe I shouldn't trade. Or maybe I should get really clear on what I want to trade. I took a long there, got stomped out. I tried taking another long over here. Got clipped. Then I took a short play right here because I forgot about the news, and it was a profitable trade. And then the market takes off like a bat out of hell, and I'm like, okay, this is key right here, guys. Look at this, because I made a lot of money trading futures right here. We come into the 20. It's on the 5-minute time frame. Can't close outside the 20. So on this candle, this red candle right here, when price wicked down way below and closed right here, boom, I'm in the market long. So once again, just super clear. When price comes down to the 20, wicks outside of it, at a key level, this is a very important part, has to be at a key level. And when price respects that 20, I'm in long, and my stop's going to go wherever I can go, right? And then we caught this mega move up right here. I didn't capture the whole thing, but I did get a really nice chunk of it. So once again, clarity is key, right? You being clear on what you're looking for is going to keep you from getting your pants smoked. Thursday, nothing really that good here. Previous open print. I was actually rushing trades. Oh, this is the day I had to step back. So I actually took the long play here. I got stomped out rather quickly. Then I took another long play here. Got stomped out once again, super quick. When you're not getting follow through, the market's choppy, right? And I ended up stepping away. Was able to get a nice piece right here off the RBI, and then just play the RBI GBI, right? Like right here. Ready? Boom. Boom. Let's go into Friday, right? Because I'm running out of time here. We got to start getting ready for this party. Friday was a beautiful day. And I just want to do it from like a top-down approach, just so we can be very clear on the process. All right, so I got NASDAQ, I got SPY. First trade I want to talk about was NASDAQ. Okay, so this is on the 5-minute time frame. I always watch the market on the 5-minute time frame. I do often trade off the 2-minute, but I'm never trading off the 2 without understanding the context. Okay, if you are trading off the 2-minute, and you're not trading well, it's because it's very easy to get hyper focused on the 2-minute and forget about the context. So I always have to watch the context, and the context means the story. What is the story? Who's got the ball? How do I know? And this is where I use the key levels. We have PDH, we have pre-open print, and we got previous day low all the way down here, right? So we have our key levels, we have our targets, which are just other pit numbers from previous days, and then we open up below previous open print and we rally up into it and we get a GBI, and it is beautiful, right? Market looks like this. So what do I now know as right here in the first 15 minutes? That there are trap buyers here. That's all I know. I know this candle has taken place, so buyers are now in losing positions, right? We've all been there. Now, this also happened at open print. So this is another very important aspect, right? Why? Because the volume at open print is very large. So this is bank movement, right? This is the people that control the market are making moves because of where it's happening. So now what do? I draw my zone and I wait patiently, right? Because my ability to follow my strategy is what makes me do well and nothing else. So now if I whip out the 2-minute time frame, this is where we got our entry. So remember, if I'm trading the 2-minute, it's because I understand the 5-minute. All right, babe, I'll be down in literally 2 minutes. I need to understand the context on the 5, which is sellers have the ball, buyers are trapped, to trade the 2. Right? And it's ready, super clear, guys. Area of value, which is what? The zone around the GBI. We come into it. You guys seen a pattern here. I do this on the 5-minute. I do this on the 2-minute. It is on both time frames. This because it's the principles behind the RBI and GBI that work. It's the principles behind the moving averages that work, right? It's our storytelling capabilities that we use our tools to determine. That's what makes us on the right side of the trade. It's not necessarily, this time frame works amazing. No, bro, you just or this strategy, this, right? It's no, you better understand the context when you're using it, which is why you're successful with it or you're not. It's all these tools serve one purpose, to help us make money. How do we make money? By getting into the market when the odds are in our favor with low risk. Getting into the market when the odds are in our favor with low risk. That's how we become successful in this game. That's how we scale. That's how we take trading to the next level. Green bar ignored. So sellers got the ball. Drop down to the 2. Why? Because I need an entry. I'm trading 2 NASDAQ cons. Literally a couple ticks is like $500. So I hop in short one here, and then on this candle, this green candle, when we couldn't break that 20 or the previous candle, I hopped in another one with a take profit right here, and then I was targeting this downside target. Boom, first trade done. Second trade. Very simple, guys. I'm gonna keep this one very simple. We get a green bar that's ignored, and then price comes up to the moving average and respects it. Or no, it doesn't come up to the 20. It comes up to the 5. Right? Look right here. Comes up to the 5-day. It can't close outside the 5. So I enter the market short. All what I'm doing is figuring out who's controlling the AOV. I love you guys. I got to go kick off this party. Everyone pray for me today. And I love y'all. I appreciate you guys. If you guys have any questions, message me. We're going to be starting something new here in the end of January. And I'm going to give you guys more information about it. The Process and Profits Academy, though, it's going to be really cool. But the reason why I'm telling you guys is because these webinars, these Saturday webinars, might end up getting switched to Sunday. And I think Saturday we're gonna focus on this new academy for newer traders. Okay. But overall, if you guys got any questions, just message me and have a phenomenal weekend.